Bitcoin has just absolutely shattered its all-time high, sending some serious shockwaves through the financial world. But this isn't just your typical bull run. We're going to break down the powerful forces that are pushing the world's biggest cryptocurrency into completely uncharted territory.
Okay, let's just dive right in. Look at that number. On Sunday, October 5th, 2025, Bitcoin absolutely rocketed to a staggering new peak of $125,689. I mean, wow. This is not some small gain. This is a historic moment, and it has everyone asking one simple question.
So we see the what, right? A massive new price. But the real story here is the why. What is actually going on behind the scenes to cause this kind of explosive growth? Well, that's exactly what we're here to unpack. All right, so the first piece of the puzzle is a classic theme we see whenever things get a little shaky, a flight to safety. With economic instability kind of looming, investors are scrambling to protect their wealth, and it is totally changing where they're putting their money. And the immediate catalyst? It's the U.S. government shutdown, which just kicked off this past Wednesday. An event like that, well, it creates this ripple of anxiety across all the markets, and it gets people looking for assets that are seen as a reliable store of value, especially when the traditional systems feel like they're under stress. And make no mistake, this is not just a Bitcoin story. We are seeing a really broad move into these so-called safe havens. Gold is on its 7th straight weekly gain, U.S. stocks have also been hitting record highs, and Bitcoin ETFs are seeing a ton of fresh cash flowing in. It just goes to show this is a widespread reaction to all that uncertainty. Okay, so let's move on to our next key factor. This is a powerful idea that a lot of market insiders are calling the debasement trade. And this concept, it goes right to the very heart of what money is and, where its value really comes from. So what on earth is dollar debasement? Well, to put it simply, it's this growing belief that the purchasing power of the US dollar is eroding, maybe because of inflation or government policy. So to protect themselves, investors start moving their cash out of the dollar and into other assets that they believe will hold their value a lot better over time. And listen, this isn't just some abstract theory. Take a look at this quote from Joshua Lim over at Falcon X. He points out that everything from stocks and gold to, yeah, you read that right, even collectible Pokemon cards are hitting all-time highs. It's a huge sign that people are looking just about everywhere for alternatives to the dollar. And of course, Bitcoin is a massive beneficiary of that whole trend. Now, beyond these big economic fears, there are two more really specific trends that are just pouring gasoline on this fire. One involves some of the world's biggest companies, and the other, well, it's a curious little pattern in the calendar. We're seeing a fundamental shift in corporate America. Led by pioneers like Michael Saylor, public companies are now actively buying and holding Bitcoin as a treasury asset. I mean, this signals a whole new level of institutional acceptance. It treats Bitcoin not just as some speculative bet, but as a legitimate part of a corporate financial strategy. That's huge. And then you have this fascinating seasonal trend. In the crypto world, the month of October is nicknamed Uptober, and for a very good reason. Over the last 10 years, Bitcoin has had a positive return in October 9 times. It is a historically strong month, and you can bet traders watch it very, very closely. And guess what? This year is absolutely no exception. Bitcoin is already up more than 30% this month alone. So this Uptober effect is creating this incredibly powerful momentum, layering a predictable seasonal rally right on top of all the other economic drivers we've been talking about. So here's the crucial point. When you combine all of these factors, the shutdown, the debasement narrative, corporate adoption, and that seasonal momentum, what you start to see is Bitcoin playing a completely new role in the global financial system. And look, don't just take my word for it. This quote from Jeff Kendrick at Standard Chartered absolutely nails it. He argues that this shutdown matters more this time because Bitcoin itself is different. It's just not the same niche asset it was during the last major shutdown a few years ago. And the evolution here is just stark. Think about it. During the 2018-2019 shutdown, Bitcoin didn't really behave like a safe haven asset. But in 2025, it's a completely different story. Today, it is moving in line with assets like gold, acting as that port in the storm for investors. Its fundamental character in the market is literally changing right before our eyes. So let's do a quick recap of the 4 key forces we've looked at. You've got the shutdown fears creating a flight to safety. You've got the dollar debasement story making alternative assets look really attractive. Then you've got corporate buying and the October effect adding some serious momentum. And the result of all this? Bitcoin is graduating into a recognized, legitimate, safe haven asset.
And that leaves us with one final massive question. As Bitcoin solidifies its role as a form of digital gold, a globally recognized store of value outside of any single government's control, what does that actually mean for the future of money, for banking, and for the entire global financial system? That's the multi-trillion-dollar question, isn't it?